Okay, I think while we're waiting for Dr. Gule or Jerry to join us, I'd like to welcome everyone on the conference today to the session. I think we can probably start with a quick introduction of the various speakers and to do a bit of a live poll through the chat box while we're waiting. I think we can all see Jerry at the moment.
Oh, okay. All right, let's go.
Great.
Good morning, everyone. I can't hear you. I don't know why, but I think we better get going. And my suggestion is that Viresh should actually take over should take over the questions because I can't hear you. Everything is on, but I can't hear you guys. Wow. But one thing I can assure the delegates about is that we have a great panel here. And it's a pity that my stuff seems to be, my tech seems to be letting me down. So I'm going to hand the rope to you, Viresh. I hope you can be comfortable with that, but we need to get going. Can't the people...
Okay, so I'm a adept lip reader, and Jerry has just said that he's willing to pay me any asking price to take over for him. I'm sure all of us, all 53 of us on the stream can agree to that, and you'll support me in this. Thank you to everyone for joining us today. It's a privilege to be able to spend some time with you this morning at the conference. I trust it's been a good session so far, and I think what we're here to discuss is actually very much summed up in the name of the conference itself, the future of HR. And a lot of what we're about to speak about today relates to the way that we see the role of human resources and human capital evolving at the workplace to have an even greater impact on your key constituent, and that is your employees. I'd like to introduce the rest of the panel who's joining me in discussion this morning, and then we can kick into some of the conversations that we'd like to take a bit forward. Firstly, if I can ask Shaun to introduce himself, where he fits in, as well as his personal views and passions around financial services and the role that financial literacy specifically can play in improving the lives of employees.
Thank you, Viresh. So good morning, everyone. My name is Shaun Biggs. I form part of Sanlam Distribution. I form part of SPF, Sanlam Personal Finance Distribution, and I fulfill the role of a branch manager. And a part of my job is to go out into workplaces to conduct financial education workshops, financial literacy sessions with audiences of people, and something that, Viresh, that I'm very passionate about. I'm passionate about two things. I'm passionate about public speaking, and being able to, as part of my role, get in front of audiences to engage people is something that I have thoroughly enjoyed over the last couple of years. So just a bit of background, I've been with Old Mutual for 10 years and fulfilled various roles there in management capacity. And I've been back at Sanlam now for the last 9 years, going on to 10. And financial wellness is something that, as a financial advisor, really at its core, something that I'm very passionate about. Because the truth is, if people's financial state at home is not well, then it really affects all relationships. It does not only break down on the home front, it also breaks down at the work front. And so I really feel that it's a bit of a calling on my side to empower people, to equip people, and to live up to Sanlam's purpose, Viresh, because Sanlam's purpose simply says that we are all about building financial resilience. We are all about empowering people to build capacity for them and to help them live their best life, financially speaking. So that's what I thoroughly enjoy about my job, and I'm so happy to be here today.
Thank you, Shaun. You've mentioned the fact that, and our own research, as well as many other sources of research, indicate that South Africans and South African employees are not financially resilient. I'd like to have a quick poll on the chat box, which is on your screen in front of you. who of you in attendance today feel financially resilient in your personal capacity, let alone your employees? Who of you feel as if you are in complete control of your finances, you understand what you're doing, and you're able to step forward and say that I am confident in my current and future financial situation? While you are furiously typing away, I'd like to bring Ayanda into the conversation to the same end to introduce yourself, where you fit in, and what is your specific focus when it comes to helping employees manage the key issue affecting their financial outcomes, and that is debt.
So hi everyone, my name is Ayanda Ndimande, and where I fit into Sanlam, I'm also at Sanlam Personal Finance within retail credit and position of strategic business development. And really my role is to optimize on our channels and to find and source new opportunities for our business. And I think within the scope that we're looking into now, into employees, employers, I think my role there is really it's to educate. And I think if we look at the time that we're currently in, it's an ideal time where I think we also have a lot of attention due to lockdown. I think when it comes to financing and personal finance, it's not a new subject. It's been spoken, but I don't think that we've been hearing or people have been hearing. And we're kind of like forced to now sit back and assess because we're in this shock and start looking at things differently. So in the past couple of months, I've been quite involved in the media through radio and written media as well, just looking into what it is that as people we can do to better our finances, as well as how our finances impact us as people, and therefore it then impacts our work environment, our productivity as well. So we're really in a time where we need to assess and try and do things differently and better.
Great, thank you, Ayanda. I just want to make the point that either people are feeling a bit shy to put themselves forward on the group, or the fact that no one's put themselves forward to say that they are feeling personally financially confident is an indication that even in the small, intimate group of ours that we've got here today, there are not many of us that actually feel financially resilient or confident. And I'll put myself up as an individual who doesn't feel that way either. Again, emphasizing the point that employees in South Africa have a need that their employers can help to fulfill. To help unpack that a bit further, I'd like to ask Anna, who unfortunately, to Michelle, there isn't a poll, and my technological capability is not that great, and my impromptu hosting skills are also not that great, so I'm unable to set up a poll, but you're more than welcome to respond in the chat box itself as to your views to the various questions that we'll put forward during the course of this conversation. I'd like to introduce Anna, or ask Anna to introduce herself, to explain where she fits in, her personal passions when it comes to helping members of retirement funds achieve better outcomes, and to position the role that employers can play in this dynamic.
Thanks, Viresh. Yes, so my name's Anna Siwiak. It's a Polish surname, before you ask. And I work for the Sanlam Umbrella Fund, and I work in product development for the fund. So developing solutions for our employers, for our members, that will help them to get to a comfortable retirement. So I didn't choose retirement funds as my career path. So when I left varsity, it wasn't my goal to work in retirement funds. I don't think I knew where I wanted to work. Somewhere I landed. But the first time I had a meeting with a member, and they were in tears because they realized they didn't have saved enough for their retirement, and they were essentially in a bit of a bind, was when it really cemented with me that, okay, this is where I need to be, and we need to help people, and we need to change the situation. So for me, it is a passionate project now, a passionate job at the moment. So for us, it's really about finding those solutions, and I think employers are key for this. So employers are the first port of call that members have if they have a question about their retirement fund. They're the first port of call when they don't, they want to know what the options are available to them, etc. They always go to your HR first before they even contact the providers. So we try to focus significantly on communication to members, but in order to really make a difference to members' retirement savings, outcomes, and their lives in retirement, we need the employers and the HRs to work with us.
Great, thank you, Anna. And finally, myself. So I'm Viresh. I'm your host for the day. And so I'm an actuary at Sanlam, and I've been working in the employee benefit space for at least the last 10 to 13 years. And it's been an interesting environment to be in to understand the role that retirement funds and employers can play in improving financial outcomes for their employees through what we've termed engaged employerism. And this is a dynamic where employers, through very little effort or investment, are able to make substantial changes that actually impact the lives of their employees. And I think we'll discuss how that can be done in a practicable and efficient manner through the course of the next hour or so. So to kick off, Ayanda, I mean, you're responsible for the crux of the issue, and that's debt. Can you please explain what is the current debt situation in South Africa, and has it increased since the onset of COVID-19 and the lockdown?
So the debt situation in South Africa has not been great in the past couple of years, and that is really purely because of the lack of economic growth. And we've seen instances where people are really living through just taking loans to survive, and not necessarily taking on loans, which you call like good debt, to improve their lifestyles, i.e. your home loans or business type of loans, something that will actually generate income for the future. But the stats actually tell us that people are taking up loans so that they can survive, to buy essentials. And that's where the problem begins. Now, with the issue of COVID coming in, and COVID coming in when there was a time of recession, almost pushing us into depression. Already in March, the stats that came out in the first quarter of 2020 was over 25 million South Africans are in debt. And of those, 10 million have their records impaired, which basically means they're unable to keep up with their payments, and continuous to those, it is a large number of South Africans who are more than 3 months in arrears. But what we've seen during the time of COVID-19, around about June, was that even the people that previously have been quite immune, and that would be the people that earn a bit better, the more affluent market is no longer immune. If you are currently not affected by COVID-19, you probably know someone who has been affected financially, either through the loss of a job, income, or perhaps getting into a point where they only get part of their income. So really no one is immune. We've seen the prices around us in retail prices have skyrocketed. So the economy is really struggling at this stage because a lot of South Africans are in debt. And we've also currently seen that the first-time defaulters are now becoming the younger South Africans. And for employers, it basically means that's the future. That those are the employees that are the future of the company, and if they are going into debt, it affects their productivity. So as a country, we're not in a good position, but we are in a possibly an opportunity type of position where we need to, or as employers, say, what do we do to start assisting our employees to get out of debt?
So, Jan, I think you've touched on a couple of very important points there. In the research we've done through the Sanlam benchmark, and I'll provide the links to that research on the chat box, we find that despite education levels, so you've touched on the economic situation, but despite education levels, we find that through the spectrum, whether you've just got a matric, no matric, right up through to PhD level, the understanding of budgeting and debt management in particular is very weak among South African employees. And it's at this stage I'd like to turn the focus over to Shaun and bring him into the conversation based on Ayanda's comments. Shaun, I mean, you've got a passion for education. What is the aim of financial wellness or financial literacy training against the backdrop that South African employees, through the income bands and through the education levels, tend to have low levels of financial literacy?
Yeah, thank you, Viresh. I think if I can just firstly respond with a very basic comment that I normally start my presentations with. And that is that I say to people that certainly in the world that I grew up, there were two things that, that were not discussed very much in our home. One was sex education, and the other one was education around money and how to budget and how to plan and handle money. So financial wellness for us is really about empowerment. It is about helping people with knowledge that will enable them to make better financial decisions. Because ultimately, if people struggle in that area, it's going to break down in several areas. So on the home front, things will break down. On the work front, things will break down. And that is actually something that is a huge area of concern for many people. And Viresh, what I find is that when it comes to money, people are almost, what can one call it, non-committal, almost oblivious. They move from paycheck to paycheck without necessarily putting in place a spending plan. Something as basic as a budget, where people need to say, but my money can't just come in. I grew up in an era where my father was a laborer at the time, still brought home an envelope. And the first thing that him and my mom would do is they would go into the room when he got paid and they would pray over, they would ask a blessing over the money. Now we are living in a time where we receive our money on our phones. So I wake up at 6 o'clock in the morning and I check my phone. I see my money has come in, during the night. But by the time I'm finished making my bed, 5 debit orders has gone. Or before I can even ask a blessing on this money, a large portion of my money has been grabbed. And as a result of that, Viresh, people say, but I don't budget and it's not working for me. It's not working very well. It's a waste of time. I'm not sticking to the plan. And so things happen on a month-to-month basis with our money. And a lot of people are just relinquishing control to say, but it's of no value. And that's really where we step in and where we are challenging the mindsets of people to say, but if you do a few things at a very basic level, consistently well, you will find that you are, that you make progress financially.
Sorry, Shaun, I just want to stop and ask you a couple of questions on what you've just said. Maybe just for the audience to reflect upon as we have this discussion, do you, in your own personal capacities, have a strict budget that you follow? And what do you anticipate would be the reaction of that question to the bulk of your employees, had you to ask them that? The other question, and this is something I'd like to pose to you, Shaun, is that in the absence of being on top of one's budget and expenditure in a quite disciplined manner, I mean, I personally have seen a number of expenses increase over the last 6 months due to the impact of the pandemic and lockdown. South African employees could find themselves in a position unknowingly where you are actually spending a lot more without even realizing it, just due to the various costs now being attached to daily survival as a result of the economic situation we're in. Have you seen that start to play itself out?
Absolutely. Absolutely. I mean, people are in a situation now where because they are struggling to adjust to remote working, because they are working in a structure, or maybe I should say in an unstructured environment, where expenses happen haphazardly. There's expenses that's now part of the budget that maybe was not part of the budget before. there's a lot of savings that people are making. So working from home has a few benefits in terms of, not traveling to work, not spending money on transport. But depending on the size of the household, you find that the kids might eat more. People might snack more. People might do certain things in the current COVID environment that they have not done before. So there's Netflix, there's Showmax, there's the need to keep kids entertained. There's money for gaming, DSTV. I mean, I did a wellness presentation not too long ago, just before COVID broke out, where a lady said to me that she attempted a financial conversation with her daughter who was in matric. And the daughter said to her, "Mommy, you can cut down on all the expenses, just don't cut DSTV." Now, that is the reality for a lot of people, where now they find themselves spending money on entertainment, on data, on being connected, and they found that through a means of acquiring more debt. So we went into lockdown with debt, and we find that we need more debt. I always say, as a country, we know that Ayanda alluded to economy of the country. So the economy is under strain, and we had to borrow money from the World Bank and from the IMF. And the households are in very much a similar situation, in that we are just living above our means. And if we don't decisively and deliberately put a stake in the ground to say, let me put my budget in front of me, let me take my pay slip and see what is being deducted. Let me take my bank statement just for the past 3 months and see and look at how I behaved towards my money in the last 3 months. Where have my money gone? Then we will continue in this vein, and we will, actually find ourselves becoming more and more financially distressed.
So, Shaun, I buy that argument and the rationale you've put on the table in an individual and personal capacity. It affects me as a breadwinner. It affects me in my household, and it affects me in my personal capacity as I aim to protect wealth or create wealth over the long term. To Ayanda, I mean, that affects me as an individual. Why should my employer care?
Because when you're affected, it is going to affect your productivity. We've seen research that says that the level of debts actually affect your health. You stress more, you lose your sleep, and there's more time taken off work. So you as an individual will be affected, and it means that you will not be as creative or as productive in your working environment. And I think there are value propositions that employers do provide, such as health, wellness. And I think it is time that the employers actually start extending those value propositions to include financial wellness if they're not currently doing so. And I think us, coming from Sanlam and insurance and financial background, we must actually start pulling our services together, with the value proposition that we actually offer to our clients, and not have it sitting in segments such as retirement, debt, and actually start pulling all of those together. So my sense, being in the industry for such a long time, is that debt has always just been such a taboo subject, and perhaps it needs not to be, but that depends on how it is actually introduced, as credit management, so that people actually start knowing about it. It's actually a reality. It is there. It's something that we cannot run away from. And I've heard it from our advisors who say that I do financial planning. I advise. We don't sell. We advise. But a lot of my clients are also in debt with various other companies. So it basically then just depletes their wealth management. And I think when we start actually pulling all our services together and making one offering and say, let me rather take you through a financial journey, and a financial journey means where are you now and where do you want to be in the future. What is your current situation as Ayanda or as Viresh? Because we are different. What are our needs? And I think when we can stop having those barriers of segmenting our clients and segmenting ourselves in terms of what we portray out there, we could have a much stronger value proposition, partnering with the employer and saying, this is actually what we can provide for your people. The example that I'll give is with Sanlam, we've got this great tool, it's credit solutions, that where anyone who actually registers can access a credit report, that then on a monthly basis, they get a free report so that they can use to assess their credit management, And I always say, credit management is like looking at your CV, your reports. It's like looking at your CV and reflecting back, looking at your behaviors, and then saying, what is it that I need to do? But just looking at my report means nothing if I don't understand how to interpret it. And that is where the services that can be provided are key. Because if you mesh that with having a financial coach who's then going to say, Ayanda, you are paying late. Perhaps you pay every month. You get paid on the 25th. Why do you pay your debt on the 1st of the month? Because that actually makes you a slow payer. And then it makes your credit record looks like you're actually a high-risk person. You're not. And then you hear people saying, oh, I didn't know that. I just thought as long as I pay, it doesn't actually matter when I pay. So it's those small things like, how do you actually utilize your credit? The fact that you've got a credit card with a maximum of 10,000, you're always maximizing on it, basically means your credit utilization ratio is so high that it makes you a high risk client, So when we start bringing those things into the table and we bring all our services together and we put our coaches in place and then we say this is the value proposition that we give to employees so that they could be more productive. If they can think less about their stressful issues, it means they can think more about their work and start being more productive.
Okay. Jerry, so you've joined us online, so you're more than welcome to take over the hosting baton. But just a question, based on what you said, Ayanda, there about the employer and the impact at the workplace. Traditionally, employee benefits have been implemented through a retirement fund and healthcare through medical aid and other measures. To bring Anna into the conversation, an umbrella fund structure is almost the preferred vehicle for many employers these days, bearing in mind that there are a number of employers who choose not to go into umbrella funds for very valid reasons. But as a means of addressing employee financial outcomes within the retirement funding context, as well as the insurance space, where have umbrella funds come from and where are they going? Again, with your hat as the head of product development firmly on.
Yeah, so umbrellas have evolved a lot over the last, I'd say, 10 years. So we all know back in the day, you'd have your big standalone funds and it would be run by the employer. And the costs associated with those standalone funds became very, very high. Umbrella funds provided a solution for that. So a large fund, unrelated employers, and all of those employers and all of those members can help fund those costs. So we've seen a massive shift from standalone funds into umbrella funds, and the importance of those funds is critical. So you mentioned that umbrella funds have been primarily used as the solutions for employers, for their members, to provide retirement funding as well as some insurance. So your group life, your disability, funeral, for example. So the bare necessities. But it's important to remember that it's not isolated. So everything Ayanda's spoken about is critical. So in terms of members that are in debt, that affects their retirement fund. Why? Because as soon as they have the opportunity to withdraw their funds, they do. They're changing jobs, so they would take the money in cash to pay off debt. We hear that argument so often. When we encouraging members to keep their money preserved, to keep it saved for retirement, the number one response that we get is, but I have debt to pay off. So if we can utilize all these solutions to have a great retirement fund option available for members so they're saving sufficiently, but then also help them with the debt counseling, also help them with financial literacy and training so that they're aware of all of those aspects and can handle those aspects outside of their retirement fund, then everyone wins. But it is a difficult conversation to have when members tell you that they're in debt and they need to pay off that debt and they can't think about retirement right now, which is the reality for many, many South Africans. So I think it's critical to have all the aspects looked at together and at the same time. And as always, the employer is critical for that, because a lot of the time a member won't know where to go to get advice on how much they need to save for retirement, or they won't know where to go in terms of what are the options when they are retiring, or how to get out of debt. So the employer plays a critical role in making that information available to members so that they can utilize it.
Okay, and for everyone's benefit, I've just been informed that Anna's undergoing load shedding. So what you're seeing is a real-time live stream of Anna's experience where she is right now. You've touched on information, and Ayanda, you've touched on education. So I want to bring Shaun back into the conversation. When you've mentioned financial wellness training and coaching, what does this actually involve in practice?
Viresh, before I answer and get into the detail of what that actually means in practice, I want to just make the following comments based on sort of what came to mind when I listened to Ayanda and Anna just now. We often go into workplaces and we find that people are given information and statements and reports that they struggle to interpret. So Ayanda made the comment or the point around the credit score and, you know, having the report in front of you, but what does it actually mean? While Anna was speaking, I was also thinking about how often we go into the workplace where I ask the audience, how many of you have seen your pension benefit statement? So some of them might have been working for years. Some of them, you will not believe me if I say many people don't look at their pension benefit statements. And for the few people who do in the public sector, the government employees pension fund would, for example, on request, and I'm sure many HR officers would on request make that statement available. But what doesn't come with this statement is advice. What doesn't come with the statement is clarifying the information and the detail on there. And so to come back to your question, financial wellness to us is about holistic financial planning. It often saddens me that when people hear, when I speak to HR practitioners and people managers, they're often reluctant to put us in front of their staff because they are very afraid that we're going to push a product. But I want to say that we are quite passionately focused on not selling on those opportunities. When we do financial wellness, what is important to us is that we empower and equip somebody with financial or understanding financial details, financial decisions, and things like benefit statements and information that would enable them to make better decisions. So if that means they take the information that they've sort of gathered or gained from us and they go to their own broker, that is also okay. Because our responsibility and our obligation first and foremost is to ensure that we change people's behavior ultimately. And then when it comes to money and money management, that people function better in that area and are less intimidated and certainly less oblivious about financial wellness.
Can you guys hear me now?
Yes.
Good.
Yes, Jerry, we can.
Yes, I just wanted to ask you, Viresh, in terms of international benchmarks, this problem that Anna was describing earlier and the problem that Shaun is talking about now in terms of financial literacy, financial fitness, is this just a South African phenomenon or is this worldwide?
So, Jerry, I think it's a very good question. And I don't think that there are specific international benchmarks on this issue, but in the research that we've done, we can be confident in saying that it is a worldwide issue. Through to first world countries and through to developing nations like ourselves, financial literacy is an area of great concern. And not to use the generational stereotypes, but we find in South Africa's context, as well as internationally, that while millennials are the best educated generation in terms of normal academic qualifications as a population cohort, they are seemingly less financially literate than the generations that came before, while also being more confident in their abilities. So you've got the dynamic of a higher level of confidence, but a lower level of capability playing itself out. So South Africa is not unique in the story. It's an issue that countries all over the world are trying to grapple with in different means. And where I think as South Africa, we are fortunate to the extent that we've got a well-developed financial services industry, which in many respects is actually more advanced than our contemporaries abroad. I like to use the example that, what is it now, about 2 years back, we went on a holiday to the States, and for various reasons, we actually got stuck there. The plane broke down, if you can believe it. And it ended up being not a great experience. And we were at the airport, and it was at JFK. And we were given a refund for our ticket, and we were given the refund in a written check. And now here I am as a South African getting this written check, and I know I'm about to ask a very stupid question that's going to make me seem like a third world yokel, and the cashier is going to think, look at these guys from South Africa, they don't even have checks. And the fact is, I've never physically held a check in my life. And I had to ask, well, what do I do with this? Where do I go with this? And it's obviously because, in South Africa, our banking system is very advanced, and no one really uses checks anymore. And that's just an example of how advanced South Africa is relative to many of the other countries. And yet, even with that advancement, the level of financial literacy through the income spectrum, through the education spectrum, is still quite dire. And that's where I think conversations like this, as well as professionals like the human resources community, need to play a role in enabling better degrees of financial literacy, given the access they have to breadwinners.
Yeah, great. Thank you so much for that. And once again, apologies for the little bit of a challenge. The HR professionals that are sitting on this platform today, listening to you guys, they deal with these issues on a daily basis. What Anna was saying around a person saying, please, let me just have my money because I have that debt to settle before I can think about retirement. Anyway, what's retirement? I'm going to get there some other time. I remember a gentleman who reached retirement, and actually I was working for a company that offered housing to people. And this guy forgot the fact that he was going to retire and need a home. As a result, we had to change the contract to, okay, you become a temporary employee for 1 year while you sort yourself out in terms of a home. Shaun, you guys conduct these sessions. And what turned my observation when I used to be in this space was that these are not the most popular sessions. How do you popularize your training sessions to make sure that the employer can bring as many employees as possible to listen to you?
Thank you, Jerry. That remains an ongoing challenge. It's a good question in that often when I approach an HR practitioner or an HR manager or even a director of a company to ask for an audience with the staff, they say, okay, Shaun, we are a bit reluctant. Let's survey the staff and see if they have a need. So they will throw out an email. And quite honestly, and in short, sometimes it takes me up to 9 months to get in front of an audience. Sometimes I am invited to an audience by HR, and then when I get there, 2 people turn up in the room, and then we have to cancel the session because the truth is what you want and how you obviously want a very engaging session because people learn not from the facilitator so much, they learn from each other's experiences. All I do is I go in and I facilitate from my experience and my examples over the years. I facilitate conversation, but that conversation only works well if you have a very sort of invested or very committed audience. But because people often think when they hear, Sanlam is coming, they immediately think that when Sanlam is done with them, they're going to be out of pocket with a few more rands. And as a result, they don't turn up. So part of my greatest rewards is whenever I finally get in front of the audience and I manage to do an hour-long session with people, I'm always invited back, because I ensure that the content is so relevant, so stimulating, that it really just defies and all the prejudice, all the fears that people had. To give you an example, not too long ago, I was invited to the Department of Human Settlements. I had 19 people in the boardroom, and that also took me about 9 to 10 months of emails up and down between myself and the deputy director. And then she threw out another survey and another email and another sort of broadcast and electronic brochure. And finally, I got the audience in the room. And at the end of the session was scheduled for an hour, 60 minutes. And after that hour, it was the staff's lunchtime. 30 minutes into their lunchtime, we were still going. The staff would not go. And I said to them, we are now eating, I positioned this up front. I said, we are now eating into your lunchtime. I sort of cautioned against this when we started. I tell you what, I am very happy to come back to have another round, another session. Because the topic on that day, for example, was just around wills. So we do, depending on the audience, we do a bit of an analysis to see what would be most relevant to an audience. And based on relevance, you then focus on that topic for the day. But what comes out of that session is there are often in the audience, firstly, there's younger people, then there's people closer to retirement. Then there's divorced people. There's people that are close to retirement, but they have 5 years of service because they have stopped and started working. And each time they stop working, they pick their pension money. So the session gets really meaty, it gets really valuable as these stories are being solicited and people are actually volunteering the information. Others are benefiting. So yeah, my appeal to HR managers today is when you do employee wellness programs or when you respond to the employees in terms of assistance programs, definitely do include financial literacy. Definitely do invite people who focus on financial wellness, because nothing works as well as as stories. These are stories that we can all relate to.
Great, thank you so much. I'm gonna come to Ayanda and Anna before I'm back to Viresh. So Ayanda, the whole question of people really not preparing. I mean, as Shaun has just pointed out now, the whole thing of talking about money so that you can manage. It seems like it's a subject that is taboo. I mean, you even talking about money to your closest friend. How do you break that? Because I think of what Shaun is talking about is that this thing gets pushed way back. And it's because this conversation just to talk about how are we going to manage the money. I wish somebody told me about all these things when I was 16. What is holding us back, Ayanda, from talking about this, such an important thing, money? What's the psyche here?
Is that as adults, as parents, we actually start engaging with our children about money, in the home environment, in the family environment. We actually start including our children. I mean, I grew up in an environment where if I asked for something, my mother would say month end, and she would start counting all the expenses that she's first needed to take care of before mine. But she wouldn't really let me in terms of how much things did cost. And how much she was earning and whether we were putting money away, savings or whatever. All that I knew was that she just couldn't afford. So I think that's a great start. And I think in the working environment, as Shaun has said, it's quite difficult when you actually want to pull in everyone. And I think part of those challenges, from what I've seen personally, is that employers would have potential solutions about financial management. But what typically happens is those solutions remain quite segregated to the rest of the business. So it would be an of, okay, if you want this type of service, there's Shaun, and these are Shaun's details, and you can contact Shaun whenever, So then it becomes a very individual thing that I must do, and I must remember that there's this Shaun, or there's Sanlam, or there's whatever. And I think if that can be broken down, and that whole financial planning and management becomes part of the culture of the company, of the business, and it is prioritized, where if there's time for this, either whatever time for the business, or once a month, or quarterly, or once a year, whatever, it is done, and it's not just a tick box exercise. And businesses also, if they're partnering with whoever, they actually ask for that feedback. For instance, now that we've got this credit solutions as a platform, we should then be reporting back to the business and say, since there's been so many of your employees that have signed up, this is the progress. This is actually what we've taken them through. But it shouldn't just be the company that's offering those solutions saying, this is the report, because then what happens, it just becomes a report that the company gets, and they look at it and they put it away. But the company should actually be asking those questions and saying, we actually want to see whether you are really providing value for our people, because we give you the time, we offer the time, we pull our people together. Is there really value? And I think when that starts to happen, we will then slowly start making the financial literacy a norm for everyone.
Thanks, Ayanda. Anna, umbrella funds are designed to help a number of companies come together, manage the cost and so forth, but benefit from the expertise that organizations like yourself, that has been around for more than 100 years. I think it's a brand that you can be proud of as South African, that this company has endured, has almost seen it all, because we have these cycles, ups and downs. What's your observation around the uptake of these umbrella funds by smaller entities? Because they say the economy is driven by your medium-sized entities, your entrepreneurial kind of organization. Are they taking up these opportunities?
So within the Sanlam Umbrella Fund, for example, we've got employers of all sizes. We've got small employers, your medium-sized ones, and ones that employ tens of thousands of members even. So the uptake is there. It is big within those small to medium companies, and we see that there is value in it for our employees and for our clients. And I think what's important here, so just to touch on what your one point was, and what the points that Ayanda made in terms of members engaging with money, making it part of their culture, etc., is also the stigma around retirement. So a lot of members don't like to think about retirement. A lot of people don't like to think about retirement, because you mentioned, Jerry, to say, oh, I'll get there one day. People don't like the thought of getting old. They don't like the thought of that they're going to get older and frailer, and that they might stop working. A lot of people are petrified around that, and it is something that we find members tend to avoid. So they tend to avoid thinking about retirement. They tend to avoid being concerned about their retirement savings, etc., because a lot of the times it's something that it just scares them. We've also had members that tell us that they don't believe they're going to get to retirement. They're probably going to pass away before then, because they've got bad genes or whatever the case is. So there's members that don't want to engage with it on that basis. There's also members that have very negative perceptions of retirement savings or retirement because they're stuck looking after parents that retired but with insufficient money, and now they bear that burden of looking after them and funding them. So there's the stigma that Ayanda spoke about around money and around, you know, having those discussions and budgeting and talking about the various aspects is something that we very much find in the retirement space also. And again, the umbrella funds have come to the party in terms of keeping costs down and making it as much a cost-effective solution for employers as possible. But there's nothing that we can do in terms of that stigma alone. So I mean, we can try educate members, we can try and beat down that stigma, but it really is, as a financial services industry, something that we need to do, and where we rely very much on employers and HR to work with it. It is a difficult conversation because we find often, as well with employers, members often may want to work into retirement, or they may want to work on a contract basis, or they may want to extend their employment contracts. Employers sometimes are willing to do that, sometimes they're not. So we do find that there's a little tension there as well to have those discussions, but it needs to be something that I think is more easily spoken about and isn't as feared. We all age, we're all going to get older, whether or not we live a comfortable retirement or a comfortable life when we get older. It's an important question to be considering now.
It's definitely a big question. And I think if I may now move on to you, Viresh. So during this lockdown period that we are in, this whole big change that we have experienced, I know that companies like yourselves decided to give people relief, organizations relief, to say, okay, let's suspend this, let's suspend that. What has been the impact? What have you observed, and what have you learned through this process of helping your clients to juggle this issue of, guys, you need to pay, but let's see, how can we support you so that you can go over the head, you have a bit of a cash flow? How have organizations reacted to this, and what have you learned in the process?
Thanks, Jerry. So one of the features available across retirement funds, subject to them having the appropriate rules and structures in place, would be that employers can suspend employer and employee contributions to retirement funds temporarily. And what this means is that the monthly contribution does not get paid through to the retirement fund, but is then netted off and paid through to the employee themselves. And in doing so, helps protect the cash flow of the employee or employer at that stage in time. Now, what we have found amongst Sanlam's clients, as well as across the industry, is that approximately 25% of employers have actually suspended their retirement funding contributions during the lockdown. And as part of the benchmark research that we conducted, we found that the average duration of such suspensions would be about 3 months. In the interim, since conducting the research, the majority of those suspensions have actually been rolled over and are still currently in place, with very few having been reinstated up to now. We do anticipate that once the economy starts to move more tangibly, the majority of those suspensions will be terminated and those employers will begin contributing to their funds again. Now, the reaction of employees to this change has been one largely of gratitude, because it means more cash at a time when they need it the most. And based on average statistics of available via the Sanlam benchmark, we anticipate, or we estimate, that this would have an average impact of an additional 1,500 Rand per month into the average South African employee's bank account at the end of each month, simply due to suspending these retirement fund contributions. Now, in the context of the expenses and the financial constraints that most households are under, this makes a meaningful difference on a monthly basis. Obviously, the trick is once the suspensions are released, those amounts do not get paid in cash anymore and are instead redirected into the retirement fund. Now, the question begs is, well, does this have a meaningful impact on final retirement outcomes if you suspend contributions? And in doing the modeling, it seems that there isn't a huge impact. But we're looking at between a 1% to 3% impact on final fund values if suspensions are suspended for 6 months, which is not material against the immediate short-term relief that such suspensions actually provide to working class South Africans.
Okay. If I may just follow up on that. So the suspensions stay. You are helping people to cope with the current situation. What if this thing, God forbid, goes on? We have a second round of this problem of the infections, and you have to lock down again. What happens there?
So, Jerry, we anticipate, and the most popular response in the survey we conducted was that the suspensions would be implemented and would remain in place. It's a measure of relief provided through to employees and employers when the economy is constrained. What we are wary of, though, is that with the economic situation, and if it deteriorates, many smaller employers may liquidate, and many larger employers, and you've seen the news that this has begun to happen, would begin to retrench large portions of their workforce. And it's a highly unfortunate situation. And I think as a country, we've got to come together in order to rebuild South Africa Inc. Part of that solution is investing in high quality companies who have suffered during the lockdown but remain high quality companies. And to this end, Sanlam Investments has recently released its legacy range. And Sanlam has invested over 2 billion of its own money into this investment vehicle, which is calibrated at impact investing to make a big impact on South Africa's economy, especially in light of the impact of lockdown.
Okay, thank you so much. Shaun, could it be that maybe the education that you provide comes rather too late in the life of an employee or in the life of a person? I know that you are not responsible for to educate us as citizens without you focus more on when people are employed. Am I correct to say that? But even there, is it not? Shouldn't you go upstream a little bit as institutions that offer this service bring about financial literacy? Maybe you should go a little bit up even before I'm employed. Yeah. What's your view on that?
Jerry, spot on. I agree 100% with that. And to tell you, a proactive sort of action from my part is I have the luxury of speaking in schools quite often. So I say to principals, invite me to your matriculant, invite me to your economics class so that I can engage your children. And on one or two occasions, I was taken up on that offer because I really believe, as you believe, that the education should really happen at a much earlier age. The awareness creation should happen at a much earlier age. I mean, Ayanda, you alluded to the same point. And the truth is, there is an obligation on us as parents as well to do that at home. But if it doesn't happen at home, then by all means. So in my little sphere where I operate, what I do try and do is, particularly in schools and learning institutions, I not only, when I get an opportunity to be in front of staff, I say, can you also please put me in front of your students? And that we do free of charge. I mean, that is not what Sanlam expects of me, but it is something that is necessary. It is something that will add a whole lot of value and something that I'm passionate about. But I wish more people would take up the opportunity to get us in to have these conversations and to create the awareness, at this level.
Yeah, because I mean, when you hear, sorry, Shaun, I'll interrupt you. When you hear of other nations that have a savings culture, you just say to yourself, I mean, we could do so much more with this if you just had the education. Sometimes you look back when you're older like myself and you say, well I should have done better way back. Continue, Shaun.
Absolutely. Jerry, I just want to hook onto that. I relate 100% to being a late starter. I mean, I have made so many poor money decisions in my life that I am an absolute campaigner when it comes to this. I'm on a mission to ensure that younger people don't make the same. I mean, I have 2 adult daughters. And one of the things that I am passionate about is equipping them and other younger people, millennials in the workplace, to say, guys, don't wait until you're middle age to start, focusing on retirement. Start looking at the benefit statements now. Start putting the building blocks in place right now while you are still economically active, while you are still in good health. And you know what? Set that money aside. But sadly enough, when we are young, we think differently.
Yes.
I mean, I've changed job a few times, and almost each time when I was younger, I have just recklessly spent the pension money that I've accumulated when it hit my bank account. Jerry, just lastly, I want to say the following, just on the point of being a late starter. I always say to people, while we are still working, even if you are 5 years away from retirement, there's an old adage or saying that says, in Afrikaans it sounds better, but I will sort of translate it in English. It says, a half an egg is better than no eggs at all. So even if you start late, or you've missed a large part of the opportunity, to do better in your life, it doesn't mean that you cannot be rehabilitated. It doesn't mean that all is lost. And because all is lost and you started so late, you must just continue to do nothing about it.
Yeah.
I always challenge people to set aside whatever you have at your disposal, or really look at your budget to see what money you can free up to sort of invest in your retirement, because believe me, you are going to need it at that time much more than you need it today.
Yeah, great stuff. Thank you. Ayanda, so you help people to understand debt, to manage their debt. And I mean, this pandemic thing has really come in and has just wreaked havoc through all of us here. So I just want to ask, on top of the fact that we have already been talking about the so-called black tax, how best can people manage? When I came back in here, you were talking about understanding your own credit report, beyond being on top of that, because that's likely to help you. How can we deal with these societal things that they must be managed? What would be your advice to people around that, managing your debt and still remaining responsible to those that you're supposed to be responsible for?
I think firstly, if I just needed to, at the top of my head, to just issue advice is, let's firstly be honest with our financial position and start asking ourselves questions like, can I actually afford the lifestyle that I'm living? And it's a personal question. No one else can answer that question. And what do I need to do, to change my habits? And I think if you can actually start answering those questions in an honest way, you will then be able to start having conversations with the rest of the family that you are supporting, because the issue is real. Black tax is there, and what it fundamentally does is it pushes people into more debt because hard conversations are not taking place. A person is unable to go back home and say, I cannot afford my own life. And therefore, doing these extra things is really pulling us backwards. So what is it that we actually need to do? And I also think the other point is the idea of this instant gratification that has grown so widely. That also needs to stop. We need to start looking at the future and planning for the future. And those questions of, do I really need this now? Or how is it going to affect my future finances? So if I really go and buy this expensive car, can I actually afford it? And I think that financial conversation it's not just about affording the premium every month, but it's actually being able to maintain this new expense. Will I actually be able to maintain it? Am I doing it for myself, or am I doing it for people? For other people to look at me and see me in a different status. And all of these things actually drive people into a depression. You'll probably know this, Dr. Gule, where even going home during the festive season becomes very difficult for some people because the expectation is so high that I must show up in a certain car, or I must show up with gifts and all of those things, and I can't afford it. So I'd rather prefer not to go home and stay where I am, because if I go home, it means I must go and open some more debt. So It's really driving people into, a different mental state. But I think when we actually start having those conversations with ourselves first, and then postponing those gratifications, we can actually start turning things around.
Thank you. Thanks, Ayanda. Viresh, I just want to know from you, South Africa Inc., as you referred to earlier, in terms of helping employees manage their benefits, better, what you are seeing, what your research or your studies tell you, how can employers as a collective be able to assist employees to deal with or to manage their benefits in an effective way? In addition to what Shaun was saying, the education and all that, but what can South Africa Inc. do?
I think that's the critical question, Jerry. And I think while you were struggling to log on, we positioned the crux of this discussion is around the future of HR. And where HR can evolve into the future is to play a meaningful role in impacting the financial outcomes and the financial confidence of their employees through a mechanism that we called engaged employerism. This addresses various issues from, for instance, the financial literacy training offered by Shaun through to the credit management offered by Ayanda, as well as a connected retirement fund and group insurance capability as offered by Anna. So for instance, South Africa Inc. needs to take more ownership of its current employee benefits frameworks. Unfortunately, too many employers simply do not actively review their existing arrangements and are stuck in outdated and ineffective structures. And by adequately making the use of objective employee benefits consultant, it would be able to actually have access to the various types of options that are on the table and could help to calibrate to optimize those options in a way that makes sense for their particular employee base. Now, going into the future, human capital specialists would need to understand that they play a key strategic role in determining the direction in which employee engagement takes place and the extent to which this issue of the individual's personal financial situation impacts their ability to perform at the workplace, and a key operational role in the sense that employees, through the mechanism of the psychological contract they have with their employers, look to their employers to provide them with vetted solutions that make sense for them in their personal capacities. So as an employer, when you choose an umbrella fund, you're making a decision on behalf of all of your employees. And the responsibility then rests on you as an employer to regularly revisit that choice to ensure that not only do your employees get the best deal, but that they are in the best possible structure to enable their financial confidence.
Anna, thanks, Viresh. Anna, what has been some of your challenges in the umbrella funds that you have come across that you'd like the HR professionals sitting around the table or on the line here listening to you to really assist with in terms of making sure that the work that the structure that you provide is effectively utilized? In other words, I'm asking, are there any particular challenges that you face that HR professionals can help you or can help their own employees to make sure that they utilize the structure that we've just referred to here now, the umbrella funds, better?
Yes. So I think as an umbrella fund, as a retirement industry professional, I think what we see as our biggest challenge is members obviously taking money in cash when they resign. That's twofold. So it could be because they really are desperate for money and they need it, but often we also find that it's seen as the default for a lot of the payroll or HR people that process these claims. So sometimes the HR will just say, okay, well, here's your claim form, give me your bank account details, and they don't explain that there are other options. They don't have to explain that. For example, Sanlam has got individual member services team. So they have benefit counselors. Members can phone toll free to chat to the benefit counselors, and they'll take them through all the options that they have. So they'll tell them, yes, you can take your money in cash. Remember, it'll be taxed. Yes, you can transfer to your new employer's fund. Give them the details there. Yes, you can keep that money invested in your personal capacity, and you can access it later, etc. So I think for me is very much to work together with HR to make sure that members are being referred to the counselors, being referred to the financial advisors if a company has a financial advisor, so that they are given all of the options. I know sometimes it's 9 times out of 10 the guys will take cash and they will want their money in their pockets, but for that one member that might not have taken cash, it's important for them to have access to that information. And it is, sometimes we found that certain HRs or certain companies are guilty of that. So we find incredible HRs, incredible companies that will give members, the full spectrum. They'll make it as hard as possible for them to get their money, and make sure that they chat to an advisor and sign that they've chatted to an advisor and sign that they're aware of the tax implications, etc. But sometimes we do find that it's the default, because the HR guy's dealing with a lot of claims, he's dealing with a lot of action, so he just gives the withdrawal form and says put in your banking details. So really it's again working together with the financial services industry to make sure that the members are aware of what their options are. And again, that doesn't have to sit on the plate of the HR. They can refer them to the counselors. Counseling is a mandatory requirement now in terms of the default regulations. So counseling available to members that are withdrawing or retiring. So we really need to utilize that to make sure that the default regulations are being utilized, and the purpose for why they were put in place is going to be there to benefit members.
Thank you so much. I hope that the audience is finding this very, very useful. I think it's quite useful information that you are sharing here. And Shaun, I'm coming back to you. In terms of your footprint in the country, do you only stick to the urban areas, or do you farm yourself everywhere, rural South Africa, to educate, as long as there's an employer who's willing to be part of your network, that you can reach wherever the members are? What's your answer to that, sir?
Okay, Jerry, we have quite a large footprint. But before I get into the detail of how far and how wide we can cast the net, I quickly want to latch onto something that Viresh said and the point Anna just made. And I want to appeal to employee practitioners or HR practitioners rather, to, on day one, as part of the induction, they put people in a room, they orientate them, they induct them, they give them some documents to sign. But in all honesty, we have all been in that position as a new employee to a company. And for many youngsters, that day they are just happy to have a job. So they don't think about, I need to contribute 7.5% or 12% or 5% or 15% towards my pension. And with all due respect to HR and employers, not a lot of time and attention is spent on giving guidance in that area. So I often tell HR directors, you can outsource that function. As part of your induction, bring people like us into the room, so that very options that Anna and Viresh alluded to, that people miss out when they leave the fund, we can mention that upfront. We can tell them and educate them and create an awareness on day one or in week one that will enable them, should they leave the company 2 or 3 years later or a few years later, that conversation would still stick in their mind. I just wanted to make that point because a lot of the education and awareness can be created upon induction or during that first few days and weeks of orientation. Just coming back to Sanlam's footprint, we pretty much, are very well represented throughout the country. So in every province, we are able to, wherever the invite is extended from, we are able to deploy, if I can put it that way, the right resources to where that need is. What helps us in our current environment as well is the fact that technology enables us, Jerry. So before I would say to a client in Gauteng, your nearest Sanlam branch is in Sandton, or it's in in Midrand, but now I can actually engage them the way we are engaging each other right now. So I don't have to outsource that to another Sanlam branch. Even I can actually do it from where I am. Obviously, first prize for us is when we do financial wellness, we want to do it physically. We want to do it in the workplace because that still works best. It allows for better workshop, better engagement. But with that said as well, when we deploy our resources, because when it comes to the topics that we cover, whether it's retirement, whether it's investment planning, whether it is estate planning, when it comes to the various conversations that we can workshop, we obviously have a Sanlam group where we can source expertise from. So I'm not the expert in all the areas, but when I get the invite and I've done an analysis as to what is the topic they would like us to cover, and it's a bit out of scope for me, I would, for example, then approach an Anna or an Ayanda or somebody at short-term insurance at Santam. I would then resource the correct or pull in the correct expertise. But when it comes to us, when it comes to physically traveling to areas, obviously the numbers, the size of the audience does matter, because we don't want to send expensive resources after an audience of 2 or 3 people. And that we would rather do remotely. But I think just to say again, in conclusion on that point, this age in which we find ourselves, technology hugely enables or facilitates that level of engagement.
Technology is your friend, unless it decides to
Yes.
be an enemy like it was to me this morning. Ayanda, you spoke about coaching, coaching people to be able to manage their benefits, their money. Talk to us about if that's the area you can talk to, you can speak to. What happens in this coaching session, if I may call it? How is it structured? What happens there?
Okay, so we've got experienced coaches that then engage with the client. So firstly, a person would have to register on the credit solution. When they register, it means that they will actually start getting their free credit report on a monthly basis. And just to maybe before I proceed, people often think that if they get their report on a monthly basis, it affects their credit score. It won't, because it's a soft, we call it a soft check. Okay, so it doesn't. So you get your report on a monthly basis, and yes, your report doesn't change as often as every month, but the benefit of you seeing it on a monthly basis is aimed to change your behavior, right? It's aimed so that you actually start assessing your credit, your overall credit. And we know that it is the duty of the creditor to then update the details with the bureau, okay? But we actually can't say whether that happens or not. We trust that they will do so. So again, accessing your report on a monthly basis, it means you actually follow up. If you've got a Woolworths account and if you get your monthly report and then your Woolworths account is saying that you didn't pay whereas you paid, you actually start noticing those things, and then you can actually then communicate with your creditor and say, but why is this like this? When I make my monthly payments. The other thing as well is for fraud awareness. I mean, we heard, I think it was last week, when there was a huge fraud with Experian, and a lot of people's records were actually exposed, right? And it means anything can happen if the fraudsters have accessed your ID. So another point of being able to see a report on a regular basis, it means that you can actually act fast and just see that irregular behavior happening. Now, coming back to that process of a coach, what happens there? So the role of the coach is to actually start talking to you about your report. Like I said, getting a report is something else, but actually understanding what is in there is another thing. So that is what the role of the coach is, to then actually explain it to you and say, this is your behavior. This is a reflection of your behavior. Okay. These are your debts as it is written in front of you. And if you want to move from a position of being a high-risk client to a medium to low-risk client, these are the things that you need to start doing. Perhaps you need to start breaking down your big balances. Perhaps you need to start breaking down your big interest rates. You're not going to know that on your own. You need someone who's actually going to hold your hand in that journey and start picking those things up. So the coaches are available for free. A person can really just make an appointment with the coach, and then it becomes like a tracking mechanism of, we've been in this journey for the past 3 months now. This is where I am. That is our goal of being low risk, but this is where we are, and this is actually what we are going to be doing. So what it actually does, and it also includes budgeting, your monthly expenses, not just your with your creditors, but with budgeting as well. How do you need to manage your expenses? Where do you need to reduce? And perhaps you need to take away that DSTV for a couple of months, or perhaps you need to take your package. So we find that it does help to speak to someone who's got the knowledge, then to take all that responsibility on your own, because you may not know what you need to do. I mean, a lot of people actually don't know that the creditor has got the responsibility of updating their records. A lot of people don't know that they can go direct to bureau and say, please do update. I've paid off all of these things. It's still sitting and it's affecting me. Take it away. And that can happen within a period of 7 to 14 days. But if you don't know, you cannot act.
Thank you so much, Ayanda. Guys, this has been beautiful, the parts that I've listened to. And thank you so much, Viresh, for standing in at the beginning there. So I'm going to ask you now, given where we are in terms of the time, Jabulani has made a fantastic point there, but I don't think we have time to go into it. The point that he's making is that a lot of people, when they are about to go, when they retire, that's when they start maybe building homes, because now they're maybe taking the money that was supposed to be for retirement and using it. And I think that Shaun is going to go into your training now in terms of just helping people. We also know there's a missing middle. But anyway, I'm going to ask each one of you to take the last round here and just talk about, starting with Anna, just as your concluding remarks in terms of why is it important to really pay good attention to this subject that we've been talking about as HR professionals, helping our organizations to ensure that there's good performance in the workplace and people are not really stressing about what's happening, what's going to happen, what am I going to be doing after this, but really preparing for that. So I'm going to start shooting from Anna and all the way back to Ayanda. But it's that Anna, then Viresh, you are now concluding, Shaun, and back to you, Ayanda. Anna?
Yeah. So I think I just want to highlight the point of really it's a partnership between your retirement fund provider and the company and HR in order to help members. Neither one of us can do it alone. We should all have an interest in helping our members because we care. So, I mean, I care about the members that belong to our fund. I'm sure as HR professionals, you care about the members that are within your employer as well. And really the only way to do that is to keep driving those various points and to keep providing access to all the information that we have. Again, members often will cite to us that I'm taking my retirement fund money to pay off my house or to pay off my bond. And that might be a good idea for some members, but for others, it might not be. I always use the argument, I tell members that's great, but you can't eat bricks in retirement. So if that's then going to waste all your retirement savings, you're not going to have money for food and for sustenance and for living, then perhaps that's not the best idea. So all the information is available, all the tools are available, all the aspects that will help members is available, but we need the help of the HR professionals to put it in the hands of members.
Thank you. Viresh, what would your closing remarks be?
Thank you, Jerry. If I can make a call to action to the HR professionals here today, it would be twofold. One, go back to the workplace and take a deep dive into your current employee benefits arrangements and explore when last those were actively reviewed, and to make a decision as to whether or not you wish to play a more active role in ensuring that the structures make sense. To equip you in that journey, I've also posted on the chat box the results from, or access to the results from our retirement funding research that has actually spread its wings into many of the aspects that have been discussed here today. And that's available via www.sanlambenchmark.co.za. It's got the full history of about 40 years worth of research, and especially this year's, where we looked at the impact of the pandemic on employers, employees, and retirement funds, as well as their expectations of the future.
Thank you. We ran out of time, so I'll just give you 1 second and 1 second to conclude, Shaun and Ayanda. Shaun?
Yes, thank you, Jerry. I just want to say to employers that financial resilience is a partnership. And we, from a Sanlam perspective, would like to partner the employers in ensuring that their employees become financially resilient, because we are part of an ecosystem, part of an economy, and it will be in everybody's interest to ensure that every individual staff member is a bit more empowered in the area of finances. Thank you.
Great stuff. Ayanda, you have the last word.
Yeah, I'd say really include financial literacy as part of the wellness overall. Make it a very important value proposition and prioritizes and track it.
Guys, thank you for sharing your expertise, your knowledge, and showing your passion. And thank you to Sanlam for the time that we have had to talk to HR professionals about a really important matter, because it spans all of life. So this was great. Thank you so much. Bye-bye.
Thanks, Jerry.
Thank you.
Bye-bye.
Thank you, Jerry, and
Bye.
thanks to everyone.
Bye-bye.
Bye.
Bye-bye, everyone.
Thank you.
Thanks all. Bye.